Hello and welcome to Pharma Television News Review here at BioEurope in Milan in spring 2011. On this show I have Marco Boorsma, who is a principal at Forbion Capital Partners based in Holland. Welcome to the show.
Thank you, Fintan.
Forbion Capital Partners came out of, I understand, ABN AMRO originally. Tell us a little bit about the history of Forbion Capital Partners and the types of investments your business does.
Yeah, well, first of all, thank you for having me here. As you said, rightfully, Forbion spun out from ABN AMRO back in 2006, it was. Actually, the team that is now Forbion is pretty much, was before at ABN AMRO doing the same type of investments as we do right now.
Sure.
So life science investments, biotechnology, drug development, and medical devices. I get to that in a bit more detail later on. So the team got the opportunity to take the portfolio with a 200 million fund in total into Forbion Capital Partners and just continue the business as I did at ABN AMRO, but then as a standalone venture capital. With Coller Capital and ABN AMRO as the main shareholders at that time, and that was then in the secondary divided further to other LPs.
Okay, and since it was spun out of ABN AMRO, has it raised new money as well for new funds?
Yep. So actually, we raised two other funds. One is an add-on co-investment fund for Fund 1, just to take a higher part increase our share in the companies we think are very promising and successful, and of course in need of further cash. So that is really dedicated to companies of our Fund 1 portfolio.
Existing investees, yeah.
And then last year we closed a third fund, really investing in new opportunities, new companies, about close to 140 million euro fund. And of that we already did 7 investments from that fund. Besides that, we co-manage a smaller fund, Biogeneration Ventures, which is focused on Netherlands-based spin-out seed investments. So we help them co-manage that fund, building up companies, and maybe get them ready for larger investments from Forbion, for example.
So it sounds like you like to follow companies. You like to get in at an early stage and then follow them all the way through. Is that correct?
It's always a combination. When I'm here at BioEurope, we see a lot of companies, young companies. At this moment, they may not be the ideal candidates for us to invest because we have a kind of, a timeline, a horizon when we would like to see our money back. But still, it may well be that next year when we have BioEurope in Amsterdam, our home turf, that it's a good moment to engage and to dig into the company much deeper. So it's really a combination of following companies and investing in companies that we now feel are ready for us to invest. And that would be at usually late preclinical stage, early clinical stage.
Right.
Depending on indications again, how translatable you would say the animal models are into the human setting.
Okay. So if you look at the portfolio of companies that you have invested in, I think there's quite a considerable number that you have on your portfolio. Is that correct?
I think we still have about 15 to 18 companies for Fund 1.
Yes.
And as I said, we have 7 companies in Fund 2 now, so making about 25 companies now.
In total, yeah.
So
the types of companies that you're invested in, I noticed that some of those companies are based in Holland. Obviously, you're investing in local companies, but equally you've invested not just only in Europe but outside Europe as well. So what is your strategy there? Yeah,
so geographically, I think 1/3 about we invest in Northern America, US, Canada, and then 2/3 go to European. So our main focus clearly is Europe. Netherlands home turf, so we see pretty much all opportunities there. Have quite some investments in the Netherlands, but the last couple of investments were in Germany, in UK. Cellnovo in UK was the last one. in Germany and in Scandinavia as well. So focus on Europe. We like to see the companies in the Netherlands, also together with our biogeneration ventures colleagues, but certainly not restricted to only the Benelux.
Right. Now, like all funds, you've got a limited period in which you can keep that fund going. That puts pressure on you to exit from some of the investments that you do. You were a major shareholder, as I understand it, a major investor, one of the largest investors in bioech that was recently acquired by Amgen.
Yeah.
How often and what is the liquidity in terms of getting money back from your investments currently?
Yeah, that is a large variation, I would say. You know, some companies, we were also investors in Berean Pharma, a Danish company, and in Glycard, for example, the company that was sold to Roche. And I think we were there less than a year, an investor for less than a year in that company. So that's nice, a quick return of money. Biotech was a much longer process, probably also because of the therapeutic, the drug they tried to develop, which was not really the standard oncology drug, let's say. It's an oncolytic virus. So it needed really some more proof, some more patience, some more convincing before a pharma decides to pick it up. And you know, of course, it's become a tremendous success, the biotech company, and actually not only for the investors, not only for the founders, for the people involved, but certainly for the patients that are really benefiting from the treatment in the trials. And hopefully, of course, once it's on the market, a lot of more patients will get much better by that treatment.
Okay. Now, the other, you obviously co-invest alongside other venture capital firms. Is there any specific role that you have? Are you tend to be a lead investor or co-lead?
Yeah, generally lead or co-lead. It seldomly happens actually that we completely follow an investment. It may happen, of course, and we could still do that. But anyways, we'll do our own homework, our own due diligence, make use of course, what's on the table from syndicate partners already there, but still have our own experts, our own people look at each opportunity and look at it in detail. Speaking about syndication, that is getting more and more difficult because of the amount of money in the market. A lot of VCs have difficulties in raising money. We have been very fortunate, I would say, that we were able to raise a significant amount over the last years, so we can actively invest in companies. But of course, you try to share with colleague VCs, and yeah, now especially in Europe, there is a reduced number of VCs.
So, but obviously, then the pharma venture arms are becoming an important part of the play.
Yeah, exactly, and it seems like every pharma is now
got a venture arm.
Yeah, is starting a venture arm, which is fine. You know, it gives a kind of validation already for the company, because I'm sure they're gonna ask their pharma colleagues, hey, what do you think of that company and of the technology? So that is of course a big help. And now it's more and more common that even 2 or 3 and there's sometimes even 4 corporate ventures in one company leading the whole deal.
And does that help you? Does that give you confidence in the investments you make?
Well, it's on one hand, you know, there's money, and what you know, the money you can take is useful, and they usually have good expertise. So on that respect, it's comforting. On the other hand, of course, you also kind of have your company already attached to a certain pharma, and if you want to sell your company later on, the question is how well can you still get a competitive bid out of for your company later on.
The corporate venture arms often say that they're very flexible about those sort of things.
Yeah, and of course you can write down a lot of in the contracts how you're going to deal with it, but in the end they are of course closer to the company than anyone else. So if you have 2 or 3 venture arms, it's probably fine, and of course also even venture arms like Novartis Ventures, I think is really independent from Novartis, and they bring a lot of expertise as well. So It probably also depends a bit on the stage when it's strategically best to get those corporate ventures in the company. Maybe not at the seed financing or a Series A, but maybe the round before you're going to exit your company. But that depends on the company and the company strategy.
Coming to the IPO market, which is another exit for companies like yours, firms like yours. I mean, Euronext has been, in the past has been reasonably good for doing IPOs. Do you see that a market coming back at all? I mean, there's been one or two IPOs. Movitus was one that was...
Not sure how long it's going to take before it's back at the times of, 5 years ago, I think. It's already a while back. There's some expectations that on the back of some IT IPOs, there may also be a window again for biotech. I think it's wait and see, but prepare for it, like a dual strategy. If there's a window, be prepared for IPO, but also just stay in the regular pharma M&A track as well.
But in the end then, aren't most venture capital firms, they actually prefer an acquisition?
Well, you have your cash easier on the bank than with an IPO. You never know when you can get out at a good price again. But still, it's an important mode of exit. So certainly not something to forget. Only the opportunity needs to be there.
But some of your investee companies must be marked out as ones that are never going to be acquired and potentially only be able to get out through an IPO. Would that be true?
Not necessarily. We are quite always, when you start a new deal with a new pharma licensing deal with a pharma party, always be aware. Okay, how many deals can I do and still be able to go via M&A, exit via M&A, and not be pretty much locked into only the IPO route. So always keep that in mind, I think, before you're going to do multiple licensing deals. Sure. Because otherwise, you're going to sell all your jewels, let's say, all your gold to pharma companies, and there's no any other choice than IPO.
One of the things that people talked about several years ago, and it hasn't really ever happened, in my view, is the merger of more biotech companies together. Mm-hmm. Are you seeing that? Have you seen that within your portfolio companies, that there is one of the solutions to a problem is to merge one company with another?
Well, yeah, a cash-rich shell, let's say, or a cash-rich company without assets merging, that happens. An example I think would be the TrendSafe with Insmed. Insmed is a listed company, and TrendSafe had a phase 3 ready asset to bring further, and that needed further cash to develop further. And this is, of course, a great way to bring the two together and develop that product to the market, which is great potential.
Or a company like Antisoma, which has just sort of crashed.
Yeah.
Would that be a potential vehicle to bring a portfolio company into?
If we would have something that really fits in that same strategy and there's cash still, you could consider that. It's not something we would say immediately yes or no. It's
life after the deal, because you've got to make sure that the price stays
exactly.
Up and it goes north rather than south.
And it's listed. So if you once you're listed also for a venture capital company, the control is of course more difficult because it's just a public. You're not on the like for private companies. You're on the board and you can more easily steer and help a company than when it's listed.
So what's your view currently? I mean, going forward for our industry, as somebody who's investing in our biotech sector, what's your view? Is it optimistic, cautiously optimistic?
Well,
or do you
speaking
feel
from an investor, like selling companies, well, a great example is for biotechs, for good companies, good assets, there is always a buyer. I strongly believe that. We sold Pengenetics, the antibody, to last year. Forbion was sold, also one of our portfolio companies. So when the company is good, the assets are good, I'm sure there's a buyer. For new companies raising money, I'm sure, and you hear it here, it's more and more difficult to get money, simply because there's not as much money in the market anymore. On the other hand, of course, you get corporate VCs now coming up, and some VCs are able to close funds, so it will continue. But it would be good actually to get some more money, and well, you could even say more competition even for VCs, that you can easily syndicate again, and and build a critical mass again.
Do you think that will happen? Do you think that will happen?
Yeah, I'm a positive guy, and always look at the bright side. But it's going to take years. I'm sure it's going to take a while.
Thank you, Marco, for giving us an insight into the world of venture capital. Thank you for coming on the show.
Thank you very much for your invite. It's great.